Hello and welcome to the 2019 annual report summary. Hopefully you've had a chance to download and have a quick look through the report. You might not have had a chance to digest it fully yet, and that's fine. You've got the weekend ahead of you. But what I wanted to do was go through a few of the things that we discuss in the report, maybe give a little bit of color to them, explain a little bit about what's happening due to COVID, and my thoughts on the rest of the year. So what we'll cover today is the 2019 results. So my colleague and our CFO, Victor Tan, will share those with you. I'm going to talk about the dividend policy versus share buyback option. I'm going to touch on bonds again with Victor. We'll look at some of the board changes and why those have occurred, COVID-19, what's happened to the companies in our group, also what we're seeing in the broader pipeline, which I think is quite interesting. I'm going to talk about a concept called Meet the Principals, which will be running later this quarter, and also some of the things that we can look forward to in the future. If you do have questions, this is a pre-recorded video, but myself and Victor will be available for live Q&A. So as you're watching these videos, please just put your questions into the chat box and we'll get through as many as we can within the hour. So without further ado, I'm going to hand it over to our CFO, Group CFO, Victor Tan. Now, Victor, obviously his job is to consolidate the financials from all of the companies and present those numbers in a meaningful way to the board and to yourselves. But it's far more than that. His role is, a big part of his role is helping these small private companies when they join the PLC environment to make sure that they're enabled in order to give accurate financials on a monthly basis. And it's a very big job. So without further ado, I will hand over to Victor and he can talk us through 2019's numbers.
Hi everyone, I'll be taking you through the 2019 financial results for MBH Corporation PLC. So currently we have 10 operating companies in MBH, but obviously for the 2019 annual report, we will only include all the completed acquisitions up until the 31st of December 2019. So for 2019, we managed to complete 2 asset purchases, which were Beauty College and Apprentice Supermarkets. And we completed acquisitions of 4 operating companies, which is Gill Prime, Geisha, KS Training, and UK Sports. In the first quarter of 2020, we managed to complete 2 acquisitions, which were Robinson's Caravans and Samuel Hobson. But obviously, these the numbers for the 2 companies won't be included in the 2019 results. Our pro forma run rate, as we currently sit with a revenue of 78 million and EBITDA of 6.5 million for the group. From a P&L perspective for 2019, we ended up with a revenue of 58 million. That's a growth of 306% on 2018. EBITDA was 5.2 million, which is an increase on last year of 215%. EBIT of 4 million and a net profit after tax of 3.6 million, which was an increase of 190% on 2018. So the results were largely driven by the strong organic growth that we saw from the companies that were part of the 2018 listing. So collectively, the 3 companies generated EBIT growth year on year of 19%. From earnings per share, on a fully diluted basis, we finished at an EPS of 10.4 pence per share for 2019. And that's slightly down on 2018. Having said that, I think we believe 2018 EPS is not a true reflection of what the real results would be. It's effectively a part year EPS without the full year trading conditions of the listed companies. So we do believe 2019 is more representative of the true results of MBH and the benchmark we're going to be setting ourselves on. In terms of the balance sheet, we ended up with a net assets of 43.3 million, a cash on hand of 4.5 million as at 31st of December 2019. In terms of the cash inflow that we generated in 2019 from operating activities, very pleased to report the cash inflow was 5 million for the full year 2019. With the working capital and debt position, our current ratio is strong, which at 1.68 times, and that excluded deferred and contingent consideration, which will all be settled in the issuance of shares in MBH. Our debt levels are relatively low of 1.8 million and a debt to equity ratio of 0.04. We end up with a retained earnings for the year at 4.8 million, and we will be proposing a dividend upcoming AGM of euros 0.5 cent per share, which roughly equates to approximately a 1% dividend yield based on the current share price. So in summary, from a P&L perspective, a very strong year, but more importantly, I think what we have finished up with at the 31st December is a strong balance sheet that actually served us quite well through this COVID pandemic. And I think once the restrictions are lifted, we are as a group looking forward to regain that momentum that we saw the tail end of 2019 and also the first quarter of 2020. So that concludes my presentation, and feel free to drop me a note or an email if you have any questions. Thanks, everyone.
So that was Victor Tan, our CFO, and hopefully that gave you a good snapshot of the incredible year that we had last year, and amazing testament to all of the teams that worked so hard to produce those results. Now, as Victor mentioned, we are issuing a dividend. It's always been our intention to return profits to shareholders. But as you can imagine, there was quite a lot of discussion internally about the best way to do that this year. And really, there's kind of three options. There's the dividend policy, there's share buybacks, which is obviously quite appealing when the share price is low, or there's just retaining the earnings to deal with any potential uncertainty with the slightly tumultuous world that we live in today. Now, the decision was made that we did still want to persist with doing a dividend. However, we would do a reduced dividend from our original intentions. And that just allows us to keep a strong balance sheet to deal with future uncertainty, or potentially look at things like share buybacks later in the year if we decide that makes sense. But it's a great thing to even be able to do a dividend in our first year. Very few companies that list are able to issue dividends in their first year. So we're rightly proud of that. Next up, I want to talk about MBH bonds that we're issuing. You may have noticed that the last acquisition that we did, Robinson's Caravan, we actually issued a note in lieu of upcoming bonds, and we're now getting close to the point where we can issue bonds. So I'm going to invite Victor back in, and we'll just have a quick chat about what the bonds mean to you as an investor. So Victor, perhaps you could give us a quick overview of what the bonds are and why we're issuing bonds at this point.
Yeah, so MBH will be listing a euro 50 million medium-term bond. It'll be listed on the Irish Stock Exchange and is trading as the Euronext Dublin Exchange. So in terms of the key terms of this bond, it carries a 5-year maturity term, interest rates up to 5% at the election of MBH, and the interest is payable on a semi-annually basis. The bond is an unsecured bond, but it will effectively be the largest debt on the balance sheet of MBH. So it will effectively rank, as like I said, the highest ranking debt that MBH will have. In terms of the purpose, really for two main reasons. So MBH has been using shares at the moment to complete its acquisitions. This provides another instrument for MBH to use to complete and settle those the acquisition consideration. In terms of raising capital, if and when MBH needs capital for growth or for acquisitions, bonds can also be used to raise that capital. So that's a short summary of what the bonds are for MBH and the purpose behind it.
Yeah, great. So look, I'm very excited about this because I know that we have companies coming to us in the pipeline where, for example, Robinson's Caravan, which came to us where the founder had already retired, perhaps didn't want the potential volatility, even the upside that comes with the share price, the consideration being in shares, and a bond was a fantastic option for doing that. So I love the fact that we've now got another tool in our box of tricks to enable more deals to happen. Now you mentioned that it's not commercial debt. We typically try and avoid debt when it comes to companies coming into the group. Can you just touch on why it's so important that it's us issuing this bond?
Yeah, so typically if you go for commercial debt, there's a couple of disadvantages there. One is the loan covenants. So it does bind MBH into certain loan covenants that may be restrictive in the way we conduct our business moving forward. A good example could be acquisitions. So any acquisitions, a bank or a third-party lender may require their approval before we complete those acquisitions. Most debt lenders will require security on MBH assets. So again, that's quite restrictive. So these are the two main reasons why we haven't gone for a debt sort of option from a commercial lender or a third-party lender, so that we can actually control that debt and also manage that debt profile.
Very good. So look, I think it's exciting. I think it definitely will enable us to do and complete more acquisitions, and I think it's a really good option. So we're currently going through the listing process. Do you have any kind of time frame as to when this will be announced?
Yeah, we'll be submitting our final prospectus to the exchange tomorrow on the 29th of May 2020, when we release our 2019 results. And we expect a listing hopefully within a week from that date.
Very good. Thank you very much, and we'll hear from you again very soon. One of the biggest changes that we talk about in the annual report is a number of changes to the board. For those of you that have read the book Agglomerate, or my most recent book, Entrepreneurial Investing, you'll know that the way the agglomeration is structured, the way that MBH is structured, is a large amount of power resides with the principals, so the business owners in the group. And together they make up about 70% of the shareholding. Now, a lot of the decisions are made at that level about their own companies and about how the companies work together. The role of the board is really to ratify those decisions, but also to make sure that we're representing other investors, retail investors, institutional investors, and not just the principals. But it's very advantageous to have the business owners with such a significant stake in the company. So now that we've got through our first year, that was an incredible first year, and the board did an amazing job of shepherding MBH through that first year. But we're now in a situation where we've got 10 companies in the group, and we can actually start to return a bit more of the power to the principals in terms of the decisions that they make, which means that we can actually go back to kind of the original intention, which is to have a much leaner board that can operate much quicker, more effectively, with a lot of the discussion taking place down at the principals level. So the changes that we announced today is that Alan Presland, the chairman, will be stepping off the board. He will continue to, in his role as the CEO of Parenta, and obviously building the education vertical. David Hallen, who has been on the board since the beginning as well, will also be stepping off, but David's going to stay on as a board advisor, which I think will be very, very helpful. Toby Street is coming off the board, and Victor Tan is also coming off the board, but Victor will be staying as the group CFO. As I touched on earlier, his role grows and gets exponentially more difficult with every company that we add to the team. So stepping off the board gives him a little bit more time to work with those incoming companies and consolidate those finances with his team. So he'll be staying on as a CFO, just not on the board. We're also going to introduce a new member of the board, and Lana Coronado will be joining as the chair of the company. And I'm very excited to have Lana joining the board. I've put together a little video interview, which will be available on the MBH YouTube channel, which you can have a look at. But I think she'll really bring a lot of expertise and talent to the board. So I think that's quite exciting. We will potentially add another board member later in the year if it makes sense. But right now, I think this is absolutely the right decision for MBH, and I'm really excited to working with this new structure moving forward. Okay, now on to COVID-19. You may be aware of this pandemic that swept the world. Without a question, it's obviously had an impact on all of us, wherever we are in the world, whatever our business is, it has had some impact. So I want to break it down into two areas: what's happening internally and what's happening externally. So if we look at internally, a couple of months ago when this first happened, so on the 16th of March, I issued a statement acknowledging that it was going to impact on the businesses. I think there's really three things that I think have become very, very apparent in the last couple of months as we've worked closely with all of the companies in the group. So the first one is that the average age of the companies in our group is more than 20 years. And so the principals have all been through downturns before. And that became very, very apparent when this started to hit. The way that the maturity and the way that these companies dealt with it, their ability to communicate clearly with their teams, with their clients, and to start looking at strategies of how to mitigate the worst impacts of this. And that was really, really encouraging to see. The second thing that has really stood out is something that we always kind of hoped would happen, but it's been fantastic to see, is that all of the companies really came together to share best practice, to share what was happening, what they were seeing on the ground, what was happening in different industries, different countries, different areas of the country, sharing resources, and really, really pulling together. And I think it's an absolute testament to the types of businesses that we've got in and their vested interest in each other's success. So that maturity, that working together, that collaborative environment has been fantastic. And thirdly, just the fact that these are entrepreneurs running these businesses means that by their very nature, they're problem solvers. And not only are they problem solvers, they look for opportunities. So in the same breath, when I was talking to the individual business owners, while they were telling me about some of the strategies that they were putting in place to mitigate the worst effects, they were also talking about the opportunities that they were seeing potentially to acquire competitors, to acquire new companies that were being mistreated due to all of the confusion. And I think that's been really, really powerful to see. So no question at all, revenue has been hit, profits will be hit. There's still, I think it's still going to be very bumpy coming out of this. There's still lots and lots of unknowns, but I've never been more confident that the people in our group are the right people to be able to deal with this and to deal with any unknowns in the future. And I think actually end up coming out of this stronger. Now, what time frames that is, I don't know, but it's really been incredibly encouraging to see the way that all the companies have worked together on that. Now, outside of our group, we've also, obviously, we get a lot of exposure to a lot of companies that are potential companies for us, and that gives us some understanding and some insights as well. First of all, I do want to acknowledge there were a couple of companies that were due to join our company, were due to join in the last couple of months, and we would have expected to have announced those acquisitions. Both of those companies decided to put that on hold just because of all of the stuff that they were dealing with in relation to COVID-19. And both were in very different industries, both were in different geographies, but both of them said, look, we need to right the ship before we come in. And I absolutely think that was the right decision on their part. But equally, we've seen other examples. We had a company that's in our pipeline that will be joining us at some point this year that had been able to react and pivot slightly what it was offering in order to serve a new niche that came up because of COVID-19. And they were doing that so successfully that they actually shared what they were doing with companies in our group because they're just the shared values, and they knew that at some point they will be joining us. And that kind of spirit of sharing and collaboration, even from on the outside of the group, was fantastic to see. Overall, what we're seeing in the market, and certainly the companies that are coming to us, the companies that come to us do tend to be more mature companies, so quite similar to the companies in the group. They're saying, look, this is going to be a rough year. Maybe we've had to lay off some people. Certainly, we've had, certainly our forecasts have kind of gone out the window. But we're confident that we'll get through this, and we're confident that having been through downturns in the past, we can leverage those downturns to pick up competitors, pick up new clients, and we'll come out of this stronger. So the advantage that MBH has over a number of other acquirers is that if we bring a company into our group, we're not dependent on that company having a stellar year in its first year with us. We're acquiring companies that, like I said, on average are 20 or 25 years old. When we acquire them, what we're looking for is companies that are going to be still going in 5, 10, 20 years and contributing profits to the group. So I actually am very excited about this year, all the human tragedy aside, but from a business perspective, we're really seeing a lot of opportunities. We're really seeing some great companies that were doing very well on their own, but have seen how well companies in our group are doing and said, you know what, I actually think I would be able to perform better if I was part of a group like this. So I think the next 12 to 18 months are going to be very interesting, but I think what MBH will end up with is a large base of very talented entrepreneurs with great little businesses that are able to move very quickly and respond to the opportunities as the market gets back on its feet forward. So while we're not going to issue a forecast for 2020 or beyond, I do think this is a good opportunity to share a little bit about my expectations and a little bit about the companies in the group. So at the heart of everything that we do is entrepreneurship, and entrepreneurs solve problems, they create value, and they show up, and occasionally they get the results. Now, last year we got the results. Everyone in the group worked incredibly hard. They showed up, and we were able to see those results. But I'm most proud of the work that they were doing, because a big part of entrepreneurship is doing the work and not seeing the results. In the construction industry, one project being delayed a month can mean the difference between having a fantastic year and just having an average year. In education, a government changing a policy can completely change everything in your business. And of course, in whatever industry you're in, if a global pandemic strikes, all forecasts are out the window. So what I really am most proud about is the business owners in our group that keep showing up, that keep stepping up, that keep delivering. And I think not only did they do that to a tremendous extent last year, but seeing the way they've worked in 2020, we had a fantastic first quarter, and then the way they've pulled together and supported each other in this since COVID has happened has really been impressive. And I don't think we could ask any more of the teams that make up the companies of MBH. At a group level, I think we've also done well in our first year, but I also think we have a long way to go. And I think there's a lot of opportunities for MBH to grow. I really don't feel yet, and I take full responsibility for this, that MBH has really found its rhythm in terms of doing acquisitions. I mentioned earlier we'd had a couple that had dropped out because of COVID, but we should have had more deals lined up to take their place. And I think as we've got this first year done, we've established ourselves, you should start to see that we hopefully develop that rhythm. And I think it's kind of two parts. One is developing the rhythm of getting these great companies in. And we're not going to lower our standards. We want great, well-run, profitable companies to join us. But the other thing that I think we've got some room to improve on is sharing our story with a broader market. And hopefully you've started to see that in the first half of this year, we've spent a lot more time and effort in communicating and sharing our story. But we really want to take that to the next level because we think we do have a great story. But actually the number one a source of investors for MBH, that people that can really resonate with us, often comes from our retail shareholders and our institutional shareholders sharing the story themselves. So hopefully, if you've appreciated what we've done in our first year, and if you've got some value from being a fellow owner of MBH, we do hope that you will go out and help us share the story. And we also hope that you'll reach out to us and contact us with any questions. And now's actually the time. Myself and Victor will be available. So please put any questions into the chat box, and we'll try and answer as many questions as we can before the hour is up. Thanks again for all of your support, and here's looking forward to an incredible 2020. Okay, welcome everyone. This is properly live now, so hopefully that answered a few of the questions. We've had some questions come in. We've had quite a few questions over the last few hours on the website as well. So I'm going to go through those questions. If things come up, do keep putting them into the chat box, but I'll try and get through as much as possible. So the often question that comes up, which is actually the one that I really can't answer, is the one about share price. So we've had a number of questions around that. I guess one specific question around that is, does the low share price affect our ability to do more deals? And the answer to that is kind of in two parts. The first answer is yes, because ultimately we will only do EPS accretive acquisitions. So if the share price is too low, then you're absolutely right. We can't do EPS accretive acquisitions. But that was the reason that we introduced the bond concept. And by using a combination of bonds and shares, or in some cases 100% bonds up front, it does allow us to keep doing acquisitions. And it also offers some downside protection, as I mentioned, to business owners coming in. And so there's a number of deals where, especially when you've got older business owners, they like the story. They want to be a part of agglomeration, but they don't want any of the volatility that potentially comes with a small cap stock, whereas a bond solved that problem for them. So I think you'll see a number of deals this year that rely heavily on the bond. I think it really is it's a very useful tool to allow us to move forward, and it means that the current share price is less of an issue. I mean, definitely with our model, share price does have a bearing. And it's actually not just when it's below where we think is a correct value, but also when it goes above, because you get into conversations with business owners that, if the share price suddenly goes up to €2 or €3, the question is, well, I might just wait until the share price goes down again before I come in. So when we're talking to business owners, the way that we structure the conversations with them, we never talk about the share price. We never talk about any increase in share. In fact, when we're talking to them, we put together a framework over 5 years, and it always assumes that the share price will not go up, down, or basically if it remained even, would the deal still be attractive for them? And what you find is the companies in the group have joined for any number of reasons. But the deal has to make sense for them regardless of what happens to the share price, because ultimately that's the one thing that's outside of our control. What we can control is the fundamentals, making sure that we're doing deals that are earnings per share accretive, that these are good, well-run, cash-generating businesses, and that's what we'll continue to do. And I think, our track record bears that out. So another question that came in, what is your acquisition criteria for completely new verticals, as well as add-on acquisitions for existing verticals? Good question. So I think a lot of people tend to think in traditional M&A, you have a target. So you say, okay, we're going to go after a particular type of company. We don't really tend to have that approach because we get a lot of inbound inquiries from companies. We have our own criteria, was ideally what we're looking for. Or I guess our target tends to be companies that are well established, that they're profitable, maybe doing 1 to 10 million in EBIT. Oftentimes they're owner operated, and a big distinction is they're not looking to exit. They're looking to take the business to the next level. Now, obviously, we'll look at deals outside of that. We're entrepreneurs, and we want what's in the best interest of all shareholders. But we don't tend to go out and target companies. We tend to look at what comes to us and ascertain whether it's a good fit for the company. And so the ones that right now we have 4 verticals: we've got education, construction, leisure, and health. But that's not by design. That's more that those are the companies that have fallen out of the pipeline. They've gone through the due diligence process and they've fallen out. So the new verticals will be determined by the next companies that come along. Basically, if they fit within an existing vertical, that's where they go. If it doesn't fit within an existing vertical, that becomes a new vertical. And I think we could probably see a couple more verticals this year being added to the group. Around what we call tactical acquisitions, which are acquisitions that are, or add-on acquisitions, as the question asks. There we have a little bit more of a little bit more scope. So you'll see some of the companies in the group, for example, Acacia has done deals which are asset-only deals. So the company maybe wasn't right for us, but we could just acquire the asset. So you might take on a company that has a fantastic database, or has a particular license, or has almost like an acqui-hire as potential people. So the companies in the group that can do their own acquisitions have a little bit more scope, and it's whatever makes sense for them. Obviously, all the due diligence is checked so that there's no risk. And of course, we have our ultimate de-risking clause in every contract that we do, which is in that first year. If the company doesn't perform, then we have the right to unwind the deal, which kind of basically is the ultimate fail-safe for shareholders. So another question that says, is there still a convertible loan program still available? If so, what are the details? Victor, do you want to take that one?
Yeah, sure. So I think firstly, I want to acknowledge that the main goal of MBH and the board is to ensure our earnings per share continue to grow. Anything we do, whether it's through acquisitions or through obtaining financing or funding, has to meet that goal. In terms of whether it's an active convertible loan note program at the moment, there isn't one. We did accept some convertible loan notes, I think back in January 19. At the moment, it's still about $500,000 on the balance sheet. But again, going back to the first premise that an objective is, we have to entertain any form of financing or structuring of an acquisition, whether it's bonds, in equity or convertible loan notes. Have to entertain that so long as the terms are right and achieves our objectives of growing EPS.
Yeah, very good. Cool. So a couple more questions just come in, and I'll get into some of the ones that have been emailed us during the day. So the first question is, how competitive are these acquisition opportunities? Now, apologies if I'm not getting this quite right, but I'm guessing the question is, are there a lot of people fighting for these deals? Because if you look, and I'm guessing where this question comes from, is if you're certainly pre-COVID, if you look at what was happening in the private equity space, there was a lot of money chasing not that many great deals. And so consequently, what had happened was the average price that private equity was paying for a company had actually doubled in the last 20 years. And consequently, the amount of debt that those companies were being saddled with had doubled as well. So it was a very competitive environment, above around 100 million in revenue. Now, most of the companies that we're dealing with are a little bit below what private equity would be typically looking for. So we don't have a lot of competition in that space. But more importantly, the majority of the companies that we end up talking to are not for sale. You know, they're not looking for an exit. They are they're really looking to grow the business, and they're looking for a platform that we provide them in order to do that. So it does seem to it does seem that by doing that, we kind of avoid getting into bidding wars. And I think that's very deliberate on our part as well, because actually if somebody wanted to exit their company, they could probably get a better price than we pay by going to an external party. But that's not what we're offering. And it's a little bit of a strange one, because people always talk about valuations in terms of companies, but valuation is really what happens when you sell the business. And actually the business owners that join us, really what they're doing is they're swapping their private stock for public stock and then carrying on running their business. So it's valuation is a little bit of a misleading term, but generally speaking, we don't have competition for the deals that we do. And the second part of the question is, do you expect to or need to broaden the range of verticals that you address? So we don't need to, but we do expect to. So as I mentioned in the in the last question before Victor, it tends to be driven by the companies that approach us. So if they fall into one of the 4 verticals that we currently have, that's great. If it's outside of that, you know, if a company comes through and it's in food and beverage, or it's in retail, or it's in luxury, then we would just create a new vertical around that. What you do definitely see is that there are more companies coming to us that see companies like themselves in the group. So once we started with education and construction, a lot of the companies that contact us are education or construction. But as we add more verticals, you'll see those verticals start to fill up as companies go, oh, that's a company like mine. I'd like to come and join that as well. So, but we're open, and yeah, as long as it's a good company. Yeah, we had this. The plan was always to be geographically diverse and to be industry agnostic, and that was to give shareholders protection. Now, needless to say, in our planning, we hadn't anticipated a global pandemic that would affect most industries and most countries. But I do think that that idea, that diversification, is quite a key element to protecting shareholders. So hopefully that addressed your questions. If not, please expand. Okay, a couple of the questions that we had through the day. So what is the reasoning behind the board changes? So I kind of touched on that earlier, but actually the intention was always that we have quite a lean board that can operate very quickly and effectively. And now that we've got more companies in the group, a lot of the day-to-day operational decisions about how the boards how the companies operate, which new companies should come into the group, those sort of things can be handled at that subsidiary level. We kind of have a Senate. Each company that comes in has 1 seat and 1 vote on that board, and have some great discussions. And then really as the board, myself and Vicky and Lana, who's joining us, which I'm thrilled to have Lana on board. Our job is to make sure that we're making sure that retail investors and institutional investors are also getting representation as well, and that it all runs smoothly. But I think we can do that just as effectively and continue. And what we want to do is we really want to pick up the pace, as I talked about, trying to build that rhythm of acquisitions and build that out. So hopefully that will, you'll start to see that certainly in the second half of this year. Okay, so we've had lots of questions about COVID-19. So I guess one specific one here is, how does COVID-19 impact your acquisition pipeline? Again, I touched on this. We had two companies that we had planned to announce in the last couple of months that we haven't announced. So it has had an impact, but actually not nearly as much as you, or as I would have expected. I think most of the impact is it's just taken people's focus away from, okay, look, I want to come and join MBH, to, okay, I need to sort this problem out and deal with that. And so I don't think there's any long-term impact there. But actually what's also happened is, as I talked about, the way the companies in the group have worked together has been fantastic. And I think what we're starting to see, what we're definitely seeing, is companies outside of the group that have said, look, I'm quite comfortable being outside of the group. The business is good, but I can actually see how many more options I would have if I was part of a group. And so, look, I'd like to talk to you about that. So actually, if anything, we're seeing an increase in the number of companies that have been applying to us. And these are not distressed companies. Yes, they might be having a dip in revenue because of lockdowns and things, but these are good, well-established companies. And yeah, I think long-term, they're going to be fantastic assets to the group. Okay, I'm getting in trouble so last year I communicated 15 to 20 acquisitions was our target, and yeah, we didn't do that. No, we had expected to do more acquisitions last year, but put my hand up to that. It took us a while to get, I think, established on the German market. It took us a long time before anyone started trading our shares, and we kind of had to learn which partners to work with around investor relations and those sort of things. I think we're now up and running, and yeah, hopefully you'll see that we can start to build up the pace a bit more. So yeah, that should be good. Another question on COVID: has it impacted our stance on certain industries and geographical locations? Not really. I think in terms of geography, we've always said that we have a preference for English language and English rule of law, and that's, I guess that's because there's so many good deals in those mature markets like New Zealand, Australia, US, Canada, the UK. We are consciously speaking to a couple of companies in Germany. We'd love to add some mainland European and especially German companies to the mix, but we have a lot of there's a lot of really good companies in those other markets, and it's just much easier to move like that. I think some of the countries where ownership is less clear, we've had some quite attractive opportunities come from there, but it's not as straightforward, and right now our focus is just getting good, clean deals into the group. And people asking about financial forecasts. So unfortunately, I'm not going to give a financial forecast. I do think, I mean, just kind of hopefully you can sort of see from what we've done in our first year, and I think, as you can tell, that yeah, I don't think that we've reached our optimum running pace anywhere near that yet. But I think we've set a great foundation, and I think what's interesting is that if you think about it from the perspective of companies coming in, what they want to do is they want to see what's happened already. And so the first few companies that we had come in, especially Cape, Acacia, and Parenta, they really were taking a risk, and they're kind of pioneers in that sense of it was a bit of an unknown quantity. And yet, as every month passes, as we get more data, as we've completed a first year, we've got the annual report out, the financial numbers, the dividends, all of these things build credibility, not just for investors, but also for the companies coming in. And so it gets progressively easier. We have, when a company comes in, or even an investor comes in, you know, they've now got more people within the group that they can talk to. And so, yeah, these things tend to compound on each other. And yeah, I think certainly by the second half of this year, hopefully we should be getting much more into our stride. And I think that's pretty much it. Let me just see. Okay, there's a comment around shareholder expectations. Yeah, again, look, I think, and I appreciate the kudos. We, like I said, when we're talking to small business owners, we don't get drawn into conversations about the day-to-day share price. There's just too many variables. It's outside of our control. All of the business owners that join us are in this for the long term. All of myself and the board are very much in this for the long term. Look, I think we'll put out some, I'm hoping to put out some research soon, which kind of shows that small businesses tend to come out of downturns very well. The ones that can adapt and move quickly come out very well. And like I said, I've been incredibly impressed with the companies in our group and how they've reacted and how they're all looking for those opportunities. So yeah, long term, I think the future is very, very bright. And yeah, appreciate everyone's support in this. Yeah, if do keep dropping us emails and supporting us on social media, asking any questions, we'll try and do as much as we can to keep communicating everything. One thing that was in the agenda and then I completely forgot to cover is something called Meet the Principals. And this is something that my colleague Vicky will be running. I think it's on the 19th of June. We'll definitely communicate it, but we're going to get all the principals on a Zoom call, and yeah, you can ask them any questions about their businesses, about what their experience has been like. And this is not just for investors. We're also going to be inviting companies that are thinking about joining us to jump on that. And what we want to do is make that a quarterly event. So it'll be nice and informal. Obviously, they can't share anything insider, so don't ask. But yeah, it's a great opportunity to meet the people that are doing such a wonderful job within their group. And with that, I will thank everyone and wrap this up. So yeah, thanks very much for your support, and look forward to speaking again soon. Thank you.